All right, let's begin. So we have covered building wealth, how to become a millionaire. First day of class. Again, if you missed that, online is the link to that presentation. Then we did ways to grow your savings, automatically setting those things up using Acorns or other things. Has anybody set anything up since we've had that class automatically? Okay, you have? Good job. You have? So remember, I already have these things in place. You know, I'm already moving towards building wealth. I'm trying to help you guys win with money. So this is an elective class. It's fairly easy, I think, but it can be important if you implement the things rather than just come and listen. So rather than being a passive listener, engage and go and open up one of the apps. Get online and do some of the things we're talking about. So today we're going to talk about credit, and I want you to all go and pull your free credit report so that you can see if there's something on there that's not supposed to be. So again, that's not going to be graded, but it shouldn't have to be because it influences your financial life, right? So please try to implement these things as you can. So then the next week we did eliminating debt and watched the Drive Free, Retire Rich video. Those first three videos, debt, savings, and building wealth, those links to those are online. If you go to, I think, the discussion or something like that, it's pinned on there. And every time I have a new one that's uploaded, then that will go there if you've missed it, okay? And then we did student debt last week. Hopefully that scared you a little bit and motivated you to minimize your debt, take less debt out, work a little bit, spend less on things, right? Hopefully you guys got that motivation to do that. That's one of the key areas or focus for this class, for me anyways, is that you guys graduate with less debt and have more options rather than not know or understand student loans. Today we're going to talk about credit scores. Why is a credit score important? Buy a house, get a loan. Okay. Do you guys think having a good score is important to have versus a bad score, or does it not matter that much? I'll show you how it can save you thousands of dollars a month by having a good score instead of a bad score. So it is important. So any questions you have about credit, how do we build credit? Should I get a credit card? You know, whatever you have about credit, then ask during this class, okay? And then on Thursday, we're going to talk about investing. The most common or frequently asked question I get is, that's great with this compound interest, but where do I put my money, right? How do I invest? And so we'll talk about that on Thursday. So after Thursday's class, after we go through it, if you still have questions about where you invest your money or how you can do that, and you have some money and want to start investing, then you can come and talk to me, all right? So let's start by watching this video. These are engaged couples, and they reveal each other's credit score, or the credit score that they have.
Me on like our second date. Who was your credit score? Check, please.
It follows you everywhere in life, whether you're buying a house, renting, getting a car.
The next thing we'll be planning for is saving for a wedding, so that's pretty big.
If you don't have it, then you have nothing, but if you do have it, then you pretty much have endless possibilities. I want to be able to make the wedding big like she's always dreamed of.
Want to buy a house?
Yeah, a house with like a front yard or backyard.
Well, for apartments for one, because it's not that fun to be a couple and live with a roommate.
Yeah, Alex, our roommate will not see this video.
Every time it's brought up, she says, oh, you better handle this.
Bryce like raps about it.
One wrap. No, the price would be 100.
That's go.
I think he's better. Yeah, right?
All right, so anybody in a relationship? You should go home and talk to them about credit score. Say, who do you think has the better credit score, you or me? You think that'd be a good conversation? Yeah, it'll be fun. It'll be fun. So what's a good credit score? Anybody know? How high does the credit score go up to?
850.
850, yeah, I showed it a little bit earlier. And how low can it go? 300. So it goes between 300 to 850. Does anybody know their score, has seen their score within the last 6 months? Good, okay. So we're going to talk about how to find and where to get your credit score for free without having to go and get a loan for a car loan or something, and how to pull your credit report for free. So I think it'd be fun to, whoever you want to, check credit score with somebody. I mean, they can check it and you can check it, and then talk about and guess who has the higher score.
I don't know when I checked my house. About a year and a half ago, 5 or 6 months ago.
Oh, we don't have credit score.
Yeah. I want to say I'm sorry to you now. Don't run away. I'd say it's about time to find out.
I love you.
That's about as good as it was.
Are you gonna like cry about it all day?
Oh, this is gonna be a concern though.
Oh, it says it's poor.
That's actually better than you made it sound.
Yeah, I don't
You
like
made it
not pay my
the
bills
way-
at all.
And it's about 30 points higher. That's sort of nice. Yeah. Is that what it is? I like those.
Oh, wow. How about that? That's good,
It's a
right?
nice solid number.
Oh, look at that.
Oh, gosh.
Yeah, that's bad. I will definitely check my credit a lot more frequently. You didn't know about it. A little more book for the house, I believe.
I was never worried about credit score. Thanks to you guys, I'm not worried now.
I don't fully understand how it even works, and I think I should find that out.
And I know it's gonna take time, but I'd like to know what I could do like right now to fix it a little bit.
This might have been the last thing in our relationship that we didn't talk about. You know, we talked about all the future this, that, but we never made sure that that would happen.
Things just got real.
All right. So one girl said, I'm not really sure how it works. And another guy said, I'd like to know what I can do now to make it better, right? So hopefully you guys have some of those questions, because we're going to talk about how to improve your credit score, what hurts your credit score, why it's important, etc. All right? Again, if you have any questions as we go, feel free to ask those. So we learned that credit ranges from 300 to 850. It's basically like a report card, right? It's your credit worthiness. And so if your friend came to ask you, hey, I'd like to borrow some money, you would like to know their likelihood of what? Paying it back. So what's their credit worthiness to be able to borrow credit and pay it back in full and on time, right? Whatever your agreement is. So that's what the credit score tells lenders. And so if you go to get a car loan and you have a 550 credit score, do you think they're going to treat you the same as somebody that has an 800 credit score? No. Would you, if a friend came and they wanted $10,000 and they had 550 credit score versus somebody with 800, who would you prefer to lend money to? 800, because you're more likely to get your money back, right? So that's all a credit score is. It's how likely are you to pay back the loan on time and in full? That's what they want to know. Now, are you going to be paying interest? Yes. So it's good for them. That's why they're lending you the money in the first place, because they're getting and earning interest, but they want at least the money that they loaned you back, plus then the interest that you promised based on the agreement. And we learned that the longer the agreement is, more likely you pay what? More or less in interest? More, right? So they say, don't worry about how much it costs, just how much can you afford per month? I can afford $300. Great, we can get this car for you, $300 a month. You can afford it. How long is the loan? Well, it's 8 years. But I thought it was 5 years. Well, that would be higher. You can afford $300, so now it's $800. They're trying to get you to not think about what? How much interest you're going to be paying. You're going to be locked into that car loan for 8 years, and we know from that video that you get car fever sooner than that usually. And so if you're locked into that paying, then your $15,000 car just became $25,000, $26,000, right? Sounds like a bad use of funds. So it measures how trustworthy you are to pay back the loan. All right, that's not working anymore. So what's the difference between credit score and credit report? Credit score tells you the score. So like there's 3 credit bureaus, Equifax, TransUnion, and anyone know the other one? Bonus points, Experian, TransUnion, Equifax. And so there's a thing called a tri-bureau credit pull. And so these credit bureaus, if you are a credit card company or a lender and you have somebody that borrowed money, then you are reporting to them, this person borrowed this much money, and if you're paying on time or not. And so the credit bureaus take that information and calculate your score. And so if you're getting like a home loan, then you get a tri-bureau credit report and a credit pull, and it shows you the credit score for each of the 3 bureaus and what's on your credit, because unfortunately a few places only report to maybe 1 and not all 3, and so they want to have a full picture. Does that make sense? So anything you do is being recorded by the credit bureaus. So they provide a credit report. The credit report is just a history of what you have. And so if you have some student loans, that's going to be on your credit report. If you have credit card or store cards, that's going to be on your credit report. If you got a car loan or co-signed for a car loan or anything else, that's going to be on your credit report. And based on how well you've been paying towards those is the score. How many of you have no loans and think you have nothing on your credit report? Raise your hand. All right, would it be important for you to pull your credit report to see if there's anything on there? Why? So you know for sure. What if there's something on there that's not yours? Huh? Yeah, fraud, right? People are stealing your identity. You know that there's all the time in the news people that are being hacked, right? Companies being hacked. And getting your information, your password, your addresses, your phone numbers, your mother's maiden name, your social security number, all of these places that you put online, some of them get hacked, and then guess who has them? People that want to steal your identity and do harm to you. And so the best place to go and get new things in somebody else's name are youth or children, people that are your age and younger, because you think there's nothing on my credit report, so why would I check it? So they can do it when you're 10 years old. Maybe there's been somebody doing something for the last 9 or 10 years on your credit in your name without you knowing about it. And they could be doing what? Being late, not paying, having not foreclosures, but going into, what is it called with a credit card if you don't pay? Judgments against you. And so and that's hurting your credit all the time, you thinking, well, I don't have anything on my credit report. Yeah?
I also know someone whose mom was taking stuff out under her name.
Yes.
So.
Yes, that could be even more common. You think there's nothing on there and you're like, Mom, Dad, you guys know anything about this? And they're like, ha, yes. Right? I couldn't get anything, so I did it in your name. Oh, great, and you've been late. Yeah, sorry about that. Okay, that's problematic, as I'll show you. So you want to check your credit report and you want to check your score. So you can see, and we're going to talk about each of these, the biggest thing is your payment history, then the amounts that you owe, followed by the length of your credit history, which for you guys will probably be pretty low unless your mom got something when you were 10. Your credit mix of credit, and then percentage of new credit. So we're going to talk about these. Yeah, still doesn't work. Let me plug and unplug this. Let's see. Okay. So this is not on your credit. Yeah.
Is there a way to like fix the frauds? Is there a way to, like, if it's been like over 10 years, is there a way to get that?
Yes, we'll get to that. So I'll show you how to do that as well, if there's something you find that's not supposed to be there. So these things will not be included with your credit score or on your credit report. Doesn't tell you how old you are. Doesn't tell them if you are employed or not. Doesn't tell you your income. So it's just saying, you know, Bob borrowed $10,000 for this car loan. Payment is $298 a month, and they have paid on time $298 for the last 10 months. And now the balance is this, and this is what the interest rate is. That's all it's going to say, right? It's not going to tell them your social security number and all those things. So if you're married, if you're paying child support, all those things, that doesn't show up. That make sense? So here's the ranges this is 2015, of where people fall. So you can see the 800, 850, there's 20%, another 18, 750. So some people, 40% are doing pretty good. In fact, if it's 700 and above, we've got quite a few. But then there are people in these bad ranges as well, right? And then this is by age. You can tell it's better on the right and worse on the left, right? So can you see a pattern here? What's the pattern? Who has better credit? Those who are younger or older? Older. But older people that are older have more opportunity to get into trouble. But what's one of the factors that influence credit score? Right, length of history. Also the mix of credit history. So do you think somebody that's maybe 40 or 50 has done more types of loans with a mortgage and maybe 2 mortgages and a home equity line of credit and a couple car loans and all these things? Or maybe you just have a credit card and a student loan. That's not as much of a big of a mix, right? So they're gonna have better. So you can't expect to have a super awesome score when you're younger, but you can make sure that you're paying on time and doing all those things. All right, so how's it calculated? We talked about this. We're going to go through each of these. The higher the score, the less you pay, right? If you're borrowing money, I'm going to show you some interest rates here. So again, I'm just trying to get this focused in. You want 700 and above. That's good and excellent. You want to be above 700. When I do mortgage loans, and people come to me, and usually you can get almost the best loans if you have 680 or above. If you have 720 and above, then you're golden. 680 and above can get it, but may have, depending on the lender, a little bit higher percentage rate, but then it goes down from there, right? And then when you get into 300, 400, 500s, they're not loaning you money. 580 is like the lowest you go, so it's kind of between 580 to 680. Then there's all these just 20 percentage differences, has big interest differences. And then when you're 720 to 850, it doesn't matter. You're fine if you're above 720. Okay, so who uses a credit score? Did you guys know all these people use a credit score? Or could? When you maybe not now, but in the future, a landlord, if they do a background check or pull your credit and it's bad, can they say, sorry, you don't qualify to live here? Yeah, they can say that. Do you think employers look at credit? Why would employers care about what your credit score is? Yeah, how reliable are you in dealing with your personal finances? Because if you're a mess in your financial life, you could be a mess, right, at work and not be really organized, etc. So it matters. What about utility companies? Did you know they could charge you more? Some of them, if you have bad credit? So obviously, financial institutions, that's like banks or credit card companies and things, could cost more. Did you know that insurance could cost more? Anybody know that? Let's look at auto insurance. What do you think? Do you think your auto insurance would go up or down if you got married? Down. Yeah. Okay, now, guys, we are more responsible because we're married for somehow. Goes down. What about if you have a no-fault accident? Is that going to go up or down? Up. But is it going to go up as much as an at-fault accident? Yes. No, it goes up a little bit if you're not at fault, but if you're at fault, it's going to go up higher because they have to pay everything. And no fault, then hopefully the other insurance pays, right? What about if you have a DWI? Is that going to go up? Yes. What if you have 2 at-fault accidents? Is that going to go up even higher? Yeah. Guess what's higher than 2 at-fault accidents or adding a teenager? Adding a teenager shoots it way up too. Bad credit score. Yeah, good job. So down here, this is getting married. Whoopee! Owning a home. That means it goes down. Your insurance rates go down. All of these things, then it shoots up. So I want you to look at here. Here's having 2 at-fault accidents. It goes up 1,100. What's number 1? 2,090. Have poor credit. So you could be paying over $2,000 more for your premium just in auto insurance. This doesn't include your homeowner's insurance and all those other things. just by having bad credit. So does it matter? Is that money out of your pocket if you have bad credit? Yeah, everything costs more. So why would you want that to happen? So improve your credit. Here's a mortgage loan, okay? This is 760 to 850. It's 5.7. Now right now, 30 years, it'd be below 4%, but this is what it was then. So 5.7. What if you have 500 to 579? 10%. 10% versus 5.7, look at the difference. The same house, so your neighbor is in the same house as you have. You have good credit, you have 800. You're paying 1,746 a month. They're in the same house, same loan. They have bad credit, they're paying 2676. How much more is that per month? Yeah, $930 for the same house because they have bad credit. Do you want good credit, people? Yes, please. One last thing. They did a study that showed, took all these things into consideration. The insurances, the loans from credit cards and mortgages and auto loans and all those things. And on average, this is how much more it costs somebody to live the same lifestyle as, say, their neighbor, right? So your ideal if you're above 760. If you have even 720, it costs $100 more per month than those guys. If you have 680, it's $300 more per month. 640, 600. And if you have 580 or below, were there some people on that video that had below 580? Yeah. They're paying over $1,000 a month more than the people that have the ideal credit for the same lifestyle. If they have the same auto loan, the same mortgage. This make sense? Okay, so if you want to raise, I include this in a presentation I do out in the community. It's called How to Get a $500 per month raise Without Asking Your Boss. And would improving your credit score and lowering the cost of things basically put more money in your pocket, basically be giving yourself a raise? Yeah. So let's talk about then what builds credit, how do we find it, etc. So say you have 3 credit cards or you have some store cards or whatever. Should you close old accounts? How many people say yes? Raise their hand. How many people say no? You guys are not participating. Let's try that again. How many people, you have 3 credit cards and you only want 1, let's say, instead of all 3, because you're like, I don't want all these credit cards available to me, so I'm going to close a couple and keep 1, or I'm going to keep 2 and close 1. Should you close old account? Who says yes? Who says no? All right, who says it depends? All right, so why would you, we're going to talk about why you may not want to, okay? Why you may want to keep those open. One, especially if the one you want to close has a longer credit history. But also the thing is, what percentage of available credit do you have and how much are you borrowing against it? So if you have $1,000 total and you have, say, $500 against those, then that's 50% of your available credit you're using, right? Well, what if the credit card you closed is $400? Now you only have $600 and $500, and so it looks like you're maxing out the credit cards, and that's worse. You want to be under 30%. So keeping it open allows your percentage to be lower and possibly even longer, if that's like you've had that longer. Does that make sense? So it depends. If it's a store card like you get from Kohl's or places that I hate, that I'll get on a soapbox in a minute and talk about, then feel free to close those. All right, should you put all your credit card debt onto one card and cut up the other cards? Again, no, because then if you move all your debt over here and now you have 950 on one card that you have 1,000 available, you're maximizing, or not maximizing, but maxing out that credit card and it looks bad. It's better to have it over a few different cards. Does this make sense? We're going to get to this. Should I sign up for a store card to get a one-time 25% discount on my purchase? Who has done that before? Raise your hand. I've done it. Come on, you guys have done it. Raise your hand. Nobody's done that? You go and they say if you sign up for the store card, you get a discount. You guys have never done it? Come on. You've done it. All right. Don't do it. If you've done it, then repent. Don't do that anymore. All right? Store cards, again, the type of mix hurt your credit. They're not the type of lender that you want to be borrowing, just like you don't want to be borrowing from the payday lenders, right? So make sure that you have a good credit card, and that's fine, but don't go in, it's gonna hurt your credit, and we know that hurt credit costs more in the long run just to get 25% off on one purchase. It's not worth it, okay? Does using a payday lender and paying on time help your credit? You have a loan, they report it, and you pay on time. Is that gonna help you? No. Okay? Just by having a payday lender on there that you're using that hurts your credit. You shouldn't be using those types of lenders. You should be using other lenders like banks, et cetera, so that's gonna hurt your credit. And again, we don't wanna have our credit hurt. All right, this is what happens. If you have a high score versus a lower score, 780, and you do the same thing like a maxed out credit card, who's this hurting more? It's gonna lower your credit score, but who does it hurt more? The person with the higher score. So it takes a while to build your credit, but it's faster to fall, right? So you have to continue to do things. So if you have a 30-day late payment, it's gonna cost you 60 to 80 points if you're lower, but it's gonna cost you up to 110 points if you have a high score. So you have to stay consistent. All right, let's talk about these. So payment history, amounts owed, credit mix, length of credit history, new credit. The number one thing is payment history. How many late payments do you have? We've talked about this a little bit. If you are 8 days late on paying a credit card, are they going to report you to the credit bureau and say that you're a bad payer? No, how many days late do you have to be? 30, yeah. So 30 days late, 60 days late, and 90 days late are going to show up on your credit score, credit report, and influence your credit score. But what are you going to have to pay because you're 8 days late? A late fee to the credit card company, including the interest. And so there's going to be like a $35 late fee. So you don't want to do that. How recent were these late payments? Were they 2 years ago, or did you just do that last month? The severity, again, is it 30-day late, or is it a 90-day late? That's going to be different. How long have you had these accounts open? Have you had them open for 15 years, and now just barely you've had your first 30-day late? Or did you open it 3 months ago, and you already have a 30-day late? You see the difference? Number of accounts past due. Do you have 10 accounts and only one's past due? Or do you have 3 accounts and all 3 are past due? All of these things matter. That's 35%. So the number one way to build your credit, improve your credit, make sure that it is doing the best you can is pay on time and don't be late. Pay on time. All right, so the amount of debt is 30%. So again, how many do you have open, and what's this ratio of balance to credit limit and initial loan payment? That's what I just said. So if you have a car loan and you get it for $15,000, then at the beginning, it's going to show that you're maxed out, right? That you're paying that down. But if you pay it down more quickly, and now you only owe $10,000 on $15,000, that's going to look better than $14,500 on $15,000. Or if you have a credit card and you only owe $300 on $1,000, that's way better than $900 on $1,000. Okay, does that make sense? So you want to be 30% or below is the magic number to, well, 30% is actually how much it influences your credit score, but 30% of the debt that you have borrowed. All right, so length of credit history. The older your account, the higher your score. So you want to keep your older credit card accounts open and the average age. So again, if you have 3 cards and you want to, and the newest one is the better card, maybe you have 2 store cards and you're like, now I'm going to go and I'm going to get like a Chase credit card or a Citibank card or something that's, you know, going to look good on my credit report. And I like this one, and I'm going to, can you cut up these ones and move the debt over to this if you want? Yeah, you can cut it up, but what don't you want to do with them? Close them. Because if you close them, and especially the one that's the longest, again, all of a sudden, your length of credit history shrinks. This making sense, guys? Do you have any questions about these?
What about Dave Ramsey's theory with the whole 0 credit score?
Yeah, that's a different discussion. So Dave Ramsey doesn't like credit and thinks you can buy things, and you can. And that's a different discussion. If you do want to do credit, then this is how you build credit and the importance of it. So yeah, you can go the Dave Ramsey route and not do any credit. I think that's great if you want to do that. I think it's unrealistic in most cases. So we're going to talk about how to build credit. But good point. Yes, Dave Ramsey says no. All right, credit mix. So the type of lender, again, do you have a payday lender or do you have a regular car loan through your credit union? Totally different. All Are they installment loans, different types? So you have different credit cards. Installment loan is just something that you pay. It's a revolving lines of credit. It's like a credit card where you pay it down, but then the money is available. Installment loan is like a car loan where if you have $15,000 and you pay $5,000 down, can you borrow $5,000 again? No, they're not just going to let you borrow it again. It's just you pay it down until it's off. So that's an installment loan. As you pay, and as you pay, it goes down, but the equity then that you have, the extra money, is not available. A credit card, if you have $1,000 and you put $1,000 on it and you pay it off, now you can put another $1,000 on it again, right? That's called revolving because you can keep putting more on, pay off, put more on, pay off. Does that make sense? So the credit mix, again, if you're older, then you've probably had more of a credit mix, and so your credit score is going to be higher because you've had a longer history and you've had different types of credit. The last one is new credit. So you don't want to just go and start getting and signing up for a bunch of new credit cards or new things because it's the amount of time all of a sudden average shrinks because now you have new credit. And then if you've opened things within the last 6 months, then that hurts your credit. It's just like, oh, they're new. We don't know what they're going to do with it. They might totally blow it. Let's wait and see what happens. And so your score goes down. And then as you show that you pay on time and things, then it goes back up. Make sense? All right. So how do you ignite your credit score? So number one factor, make payments on time. So if that's on your final exam at the end and also on the survey, what's the number one factor to improve your credit? What is it? Pay on time. Make more than the minimum payments or pay them off. So I have multiple different credit cards I use for different things. I never pay interest on any of those. I only buy things I would have bought anyways. And in the past, when I would buy groceries or other things that I'd go over on, then I stopped using my credit card for those things, and now I use cash or a debit card where I can't pay more, use more. Because it's easy to go over, like on vacations or going out to eat or buying groceries or buying things for the house or kids' activities. And so we say, this is the budget. It goes over here in this debit, or in this checking account. We have a debit card to pay for those things so that we can't go over. And the things that we would have to pay anyways go on the credit cards. And at the end of the month, when it's due, we pay them off, zero balances, right? That's how you pay zero in interest, zero in fees, and build your credit, okay? You want to keep your balances low. Below what percent? 30, if you can, 30%. Keep old accounts open. Limit the number of cards. Don't open unnecessary revolving cards, and especially store cards. It's not worth it, remember, to sign up for your store card just to get a discount. So again, for a lower premium, review your credit report, pay bills on time, keep the lines open, all those things, okay? There we go. So here's somebody with a 650, they're an improver, and an 800, they're an achiever, and these are what the achievers do. 96% of them have no late payments. The improvers, they try to do the best they can, but once in a while they have late payments, right? On average, they only use 7% of their credit limit. Is that below 30%? Yeah, it is. The improvers, they're not using 100%, but they're over the 30%, okay? They owe less than $3,500 total, and they have an average credit history of 25 years or more. So improvers are shorter time, obviously, in trying to build that up. All right, so you need to obtain a free credit report. We're going to show you how to do that. And then here's the thing. So each of the 3 credit bureaus you can pull once a year for free. Anybody know where? Where can you pull your free credit report? Credit Karma. That's, okay. We're going to talk about Credit Karma and some others. That's a place that you can pull, and it tracks what you're doing, but that's not actually, it's not giving you your credit report from the 3 credit bureaus. But yes, that's a good place to do it. It's the only one place that you can get it for free is at annualcreditreport.com. So you go there, and if you spell it incorrectly, like with one N instead of 2 and things, it takes you to freecreditreport.com. And there you would think that what? You get your credit report for free, but you don't. They are trying to scam you. It's annualcreditreport.com you have to go to. So you can get one every year from each of the 3 bureaus. That means if you've never pulled your credit, I suggest going to annualcreditreport.com. This is a homework assignment you should do. And pulling all 3 credit bureaus, Experian, TransUnion, Equifax, and seeing what's on your credit, if there's anything. And if it is on there, it's supposed to be, and you know about it, and it's yours, right? Then after the year's up, because you can only pull it once every year, then you start rotating. You pull one every 4 months. Does that make sense? So every 4 months you get a new one, and by the time that it's there, then the year's up, and you can keep doing that. So that's a good way to do that. Here are the 3 credit: Equifax, Experian, TransUnion, and it's annualcreditreport.com to get your free reports. When you get on there and sign on, it's going to ask you some personal questions like, which of these cars have you previously had a loan on? And then it's going to give you like 4. And one of them, if you've never had a loan, says none of the above. You have to answer correctly so they know who you are, that you are who you say you are. Which of these addresses have you lived at in the last 3 years, or lived at about 3 years ago? Stuff like that. And then, as long as you answer correctly, then it'll give you access to pull those credit reports. If not, then they'll say, sorry, you didn't answer correctly. You can try again in 48 hours, or you can call here or mail something in, right? All right, so here's some different credit score examples. So not all credit scores are the same, because there's the FICO 8, or now there's the FICO 9, and that's what your actual credit unions and banks are going to use. So if you go for a loan, they're going to pull your credit, and they're going to look at the FICO 9 score. If you just get on, say, where did you say, Credit Sesame or Credit Karma? They're going to use what's called a Vantage 8 score, and that's a little different. It's not going to be exactly the same. It'll give you an idea, but it's not going to be exactly the same. Right, so Credit Karma here is going to say 806 and 809, where the FICO 8 is 816. Is that a big difference? Not necessarily. And so it just depends on, at least gives you an idea. So here's mine from Credit Karma. I'm on Credit Karma as well. This was, I don't know, last semester probably. So it kind of tells you what's going on, what's happening, how long your credit is, payment history, credit card use, hard inquiries, et cetera, right? And so this is, you can go between TransUnion and Equifax. But if you want Experian or the FICO 8 or FICO 9, you have to go to creditscorecard.com, which is through Discover Card. They'll try to get you to sign up for a card. You can politely decline and say, I don't want that. But if you go there, then that's going to give you the actual FICO 9 score that the lenders use, okay? And so it's going to allow you to see what's on your credit and what's not and what your score is. So creditscorecard.com, you can go to and sign up for free, as well as like a Credit Karma or Credit Sesame. So this is my FICO 9 score, or FICO 8, 816, and it tells you, splits it into these 5 different areas, right? This is a credit mix, length of credit history, new credit, amount I owe on debt, I'm using 7%, payment history, 0 missed payments. So tells you, and it's yellow or orange or red or green, hopefully. And you can click on those and it tells you the things that are affecting and influencing your score. Pretty cool, right? Again, why is this important? Because it could cost hundreds of dollars to have a bad score. So you want to see what's on there, figure out if it's not yours, how to get it off, which we'll talk about in just a minute, and can start paying on time and not being late. Because paying late, you have to pay a late fee, and it hurts your credit, and now you're getting worse, rates and things on your loans. Okay? All right. So, anybody have any questions about that? Where do you pull your free credit score? That's your credit report. Good. Your credit score, I would go to creditscorecard.com and get it. Another place, again, I use is Credit Karma. Nice thing about Credit Karma or Credit Scorecard is once a month they send you a little email that says, hey, you're doing great. Or if there's something that somebody tries to get credit out in your name, it pops up and sends you an email. Hey, there's a new thing on your credit. You should check it out. And then you click on it and you go to Credit Karma or Credit Scorecard and it says what's going on. And you can be like, I didn't do that. And so it kind of alerts you to inappropriate activity. Does that make sense? So please, guys, again, I'm telling you this, do you get points for going and signing up for Credit Karma or something? No. But should you? Yes, you should do it. You should be pulling your credit report from where? Annualcreditreport.com, doing credit scorecard, and doesn't hurt to do twice, maybe Credit Karma, right? That's what I do. And then it monitors it. Okay? Anybody have any questions about those? Who's going to do something with their credit? Raise your hand. Are you going to pull your score or your credit report? Okay. I'm here to help you win financially, but you don't win financially if you don't do anything. All right, let's go on to how to repair my credit. So it's not just a quick fix. What if you go on there and you find something and something is under judgment and you're like, wow, that is mine, but I thought I paid that off. Like that was a cell phone with Verizon that I thought I paid off, and I only owed $49, and it's been on there for 5 years, and it went to judgment, and it's killed my credit for $49. That's problematic, right? How do you solve that? How do you get that off your credit? Or you get on, you go, what the heck is this? If you find something, you first want to ask your parents, because parents can sign up for stuff on you. They have all your information. And make sure that they didn't do it. And if they don't know about it and you don't know about it, then you're going to get on and fix it. So you can go to, you're going to report to the company that it's on. So if you pull the 3 bureaus and it's only on, say, Equifax, then you're going to contact Equifax and say, this is not mine, right? In a letter. And a lot of times they allow you to do it online now. Sometimes you have to email things in or mail things in. So you go to My FICO and it gives you examples. So I pulled this up. myfico.com. So you can go back here and this gives you most of the information we've been talking about. What's a FICO score? Scores versus credit score or your actual report. Different versions like the FICO 9 or the one that you get with Credit Karma. Your history, amount of debt. These are the 5 areas, right? Then down here it says errors on your report. Know your rights, identity theft, all these things. So I went to errors on the report. This is the #1 complaint that the Federal Trade Commission gets, is that there's things on there that's not theirs. What do they do? And so it tells you what to look for here. We're not going to go over all this, but this is where you go. Find out how to initiate a dispute online. You guys see that? Then there's different samples they give. So look at, it says, if you want to see how to do that or what it looks like, here's a sample. If you want to write a free letter in minutes, click here and here's an example letter. You just put your information in and this is the email you send it to. So they make it pretty easy. If you find stuff that's not on there, that's not supposed to be on there, go to myfico.com and then you just go down where it says, is something on there that's not supposed to be, or whatever it said. To errors on your report over here, okay? Any questions about that? So we're not going to get into depth of what you do, but it just takes you through it on this page, okay? We good with that? All right, so again, these places, the CFPB, which is the Consumer Financial Protection Bureau, they're there to, and the Federal Trade Commission, FTC, they want to help consumers like you to protect you from predatory lenders and other people that are taking advantage of you. So you can get onto CFPB or the FTC and also just Google those with how to help get something off my credit report and help will come up. But these places give information about understanding reports, getting your report, what affects it, building a record, what if there's fraud or identity theft. Children and credit reports is a big one now because, again, the #1 place for identity theft is children, which you guys would be considered children if you have never checked your credit report because that's who they're targeting, people that probably aren't checking their credit report. So anywhere from newborns up until graduation about where people maybe will want to look at their credit, they're stealing your identity more than people like me.
Is it like the same thing where like you lose your socials? So like when you lose your socials and you have to do your your taxes, don't you have to claim that like you lost it or someone has it or no?
You mean for someone for the taxes or for this?
Yeah, like
Yeah, because there's fraud with taxes, right? So people are submitting taxes for refunds and getting the refund in your name. You guys heard of this? And then you go and try to get your refund. They're like, you already filed a claim. They're like, no, I didn't. Like, yeah, you did. We sent you $3,000. It wasn't me. And it's a fraud with taxes. So there's lots of different things that could happen from taxes to Social Security, from lots of things. So it just depends on what you find. So there's crazy people out there trying to steal your identity, and it's not fun. And so the best way to make sure it's not happening to you is to monitor what's happening, right? So if you go to creditscorecard.com, if you go to Credit Karma and you sign up for free and it tracks you, and every month you kind of get on and see, oh, yep, I'm still 789 or whatever it is, then you know somebody's not stealing your identity, and you can look at what's in there and they alert you to any new inquiries or things that people are trying to get credit in your name. So that's super helpful, right? You want to monitor your credit. Another thing you can do is a credit freeze. So if you're like, I'm not going to get this used to cost money, but then Equifax, where was it, Experian? I think it was Equifax got hacked, which isn't good because they're one of the 3 bureaus and they have what on you? Everything. So they got hacked, and like I don't remember how many million people got their identity stuff stolen. So now it's free to freeze your credit in every state. You can freeze it and unfreeze it for free. It used to cost maybe $20, $35. So if you're like, I'm not going to apply for credit cards, I'm not going to try to get a new cell phone, I'm not going to do anything that people can check my credit, I'm going to pull my free credit reports, and I don't even want to worry about it. I don't want to worry about Credit Karma or whatever. I just don't want anybody to have access to open anything up in my name until I unfreeze it. You can put a freeze on, and then anytime anybody tries to do anything, including yourself, you can't until you unfreeze it. That make sense? So that's a little further, right? A little more intense. So you can freeze your credit if you want to. I suggest just monitoring your credit. And again, you do that by signing up for one of those 3 areas. Okay. So any final question? We got like maybe 2 or 3 minutes about credit. Anything we didn't answer that you're thinking about? Have questions about? Do you know how to improve your credit? Go ahead.
When would be a good time to get a credit card now?
Good credit card. So I added my son, who's 17. He's a senior. I added him as a junior on my credit card as a co-user, right? And so as we use it, because I pay on time, then he's building his credit. So if the parents didn't do anything like that, then now's a good time, right? You can go and you can get different credit cards, and you can just Google credit cards for new users or young users or for students or stuff like that. And it will come up in like beginner credit cards, best beginner credit cards or whatever. And it comes up and you can qualify for one, and maybe it's only $300 or $500 available to you, but you use it just to fill up gas, and then every month you pay it off, right? Or a couple of different things and you pay it off. So if you do that, that builds credit. It shows you're using it. You're not using your full amount, and you pay it in full every single month, and you pay on time. That'll start building your credit. So that's what I would suggest doing. Not a store card, a regular credit card, right? And just Google that, best beginner credit cards. Other questions? Okay, hopefully you know how to improve your credit, how to start your credit, pull your free credit report, and get your score. We'll see you on Thursday for investing.